In this video, traders, we are going to look at indicators to survey current market conditions. The reason we want to do that is that we can use the right setups and strategies for the right conditions. Stick around for this one. Hey traders, warm welcome to you. Thank you for joining me. All right, so we have an issue as traders in that we have a really good library of strategies, but implementing the right strategy at the right time is often challenging. You know, sometimes we're in a nice trending environment, we're buying pullbacks, we're buying highs, we're doing this, and it's paying off. Then the environment changes and all of a sudden that doesn't work. And so we pivot back to something else like selling fresh highs, buying new lows, buying double bottoms, mean reversion type trades. And then of course, the market goes back into a trending environment or it just goes completely dead. And so what we want to try and do is, there's nothing substitutes the experience in the markets, but I always say, hey, if you can become a specialist at one or two markets, that's a great way of approaching things. However, in the real world, sometimes you may be trading part-time, you may trade a multitude of markets, you may not be trading all the time, you may be kind of dipping your toe in as and when it gets volatile. Or you may just want to only trade when conditions suit your best strategy. So if you're a real momentum trend type trader, then you don't want to get involved when it's a range bound market. If you like to trade mean reversion, you like to pick those tops and bottoms, then obviously you don't want a trending environment. So something that's very binary, like an indicator, is a good way of saying, hey, yes, I want to get involved in the market with this type of strategy, or I don't want to get involved in the market, or whatever. It's a very good way of categorizing the market. Now, is it perfect? No, because markets transition all the time. Sometimes they transition intraday, sometimes they transition throughout the week, but it helps us. You know, if you're making losing trades, or if you're finding you're getting traction and then you're giving it all back, you know, very often it's because conditions are changing. So adding something like this to your decision-making process can sometimes filter out stuff and stop you getting involved with things that aren't going to work out. All right, so let's have a look at it. So imagine we've got a kind of scenario here where we've got market type 1, market type 2. So obvious trending market here, and obvious range bound market here. Looking for trend type trades here, looking for mean reversion type strategies here. And I suppose really we have got a third condition where literally it's just chopping around doing absolutely nothing. I really want to avoid that completely. Those are very challenging to trade in my opinion anyway. All right, so some of the things we can use is an ATR. So an average true range is going to show us how much movement we're getting in the market. Done loads of videos on average true range before, so go and check them out. Go and a little dig through the channel and see, because it's a really useful tool. But ultimately we can have it on whatever setting we want. So let's say this is a daily chart. It can show us the average daily range that we're getting. If we have it on a kind of hourly chart, it can show us the average movement in an hour, 15-minute chart, etc. So we can say, hey, we want the average true range to be above, let's say 150 pips if we're trading currencies in a day for us to get involved with that. So that gives us a volatility indicator, if you like, a range or movement, how much the thing's moving. Doesn't necessarily give us direction, but it's a good start. Then we can use something like an oscillator, like a stochastic or an RSI or CCR, something like anything that oscillates between a high number or low number. In the case of stochastic, 100 to 0, overbought to oversold. Now the nature of the stochastic is that it doesn't really look at the magnitude of the move. All it does is it looks at current price compared to prior price and the position of that current price in the prior price range. So the high from the last 14 days, for example, the low, where is the market at the moment relative to that? So that gives you a reasonable idea of overbought or oversold. But unfortunately, even if you're very, very quiet market, you're still going to get overbought or oversold. So one thing you can do is look and see, well, how long have we been overbought? How long have we been oversold? Which might indicate you're more of a trending environment. So you could use something like, okay, how many times do we move from overbought to oversold in a certain time period? If it's a lot, then you could say we're probably in a range bound environment, or we could be in chop, and then you can filter out for chop by adding an ATR to that. Or if we're overbought for a long period of time, we're coming off overbought, we're not necessarily going to oversold, you could say we're an uptrending market, because the stochastic is going to permanently be reading an overbought condition between 80 and 100 or 75 and 100, depending on how you've got it set up. So that's something to look at. Next one, of course, very simple one, guys, volume. And if you've got good volume coming in, generally speaking, it tends to mean more moves, more participants, more moves, more people either pushing in one direction, giving us a more greater magnitude of a move, or more participants pushing and pulling against each other, giving us kind of those counter trend trade type opportunities as well. So volume, great one. ADX, useful for picking out trends. Doesn't tell you the direction of the trend, but tells you if the market is trending. So if we've got the ADX rising and it's at a higher level, then we can use that and say, hey, well, choose your level for that, go back and look at the market and see what kind of conditions you want to see, and then see what the ADX was reading in that and say, right, that's a filter. That's a good one as well. And the final thing is rate of change. So rate of change is just showing you really how the market's moving from high to low in a long period. So if it's kind of 3 days move, big strength, the rate of change is going to be a dramatic move. And then if it comes back one day, it's going to pull back again and then push up again. So it gives you an idea on how far the markets are moving in pulses, if you like. So you can use that as a filter and say, right, well, I'm going to use the rate of change. I want this to be whatever look back you're using. Again, this is for you to decide based on your kind of trading strategy and approach and time frame. Put the rate of change up and just see the conditions you like to trade. What is the indicator showing you? Oh, well, the rate of change shows me this. Okay, well, there's your start point for your filter. What sort of volume you're looking for, where it shows me this. So you can reverse engineer the market conditions you like, the market conditions that were profitable for you. Have a look at them and go, right, well, what is the ATR? What was the volume? Was there anything with the stochastics? Was the ADX showing me something interesting? Was the rate of change showing me something interesting? And then you can then manipulate that and go, right, well, that was the data here. So now I've got a filter set that I can use so that it's only really alerting me to conditions that are very similar to the ones that I've proven profitable in. And it's super powerful, that, because then you're not spinning your wheels on stuff that's just really no good. You're not chopping around, messing around with this or messing around with this. It's like, hey, the conditions are this, great, the conditions are there now. Now I can trade, now I can put some capital to work. So have a look at that, guys, try it out. This is not a definitive list by any means. Plenty of other indicators out there that you can use, but just some ideas to get you started, to try and align yourself with the very best conditions to give you the best possible chance of success. Take care, bye-bye.